Yes, what's up, money makers? What's up, legends? Welcome back to the Anonymous YouTube channel. So, guys, welcome back in our part two of our mentorship, guys. So, guys, make sure that at least you first watch part one before you proceed on part two. So, guys, remember about our ongoing program of funding traders, guys. Guys, as long as you are consistent, you can make profits out of profits, guys. Don't hesitate to DM us, because, guys, our mission here is to make sure that each and everyone earns that financial freedom. So, guys, yesterday we provided some setups, those that took the setups. So currently you should be even floating in some profits, because, guys, we provided an entry, was it from here. So received the some weeks. After receiving some weeks, now the asset is moving into our favor. So currently you should be currently floating in profits, guys. So, guys, since that's not the topic for today, so, guys, this is the part two of our mentorship, guys. So make sure that you guys, you have your notebook, you have a place where you note each and everything, guys. Because, guys, anything you know, each and everything comes with at least with a price. So with this, I told you we shall be paying attention. We shall not be paying money, because money has to be paid to us at the end. So those that will be learning, those that will be paying attention at the end, you'll be earning that financial freedom. Get my point, guys? That's why I always recommend you at least get somewhere where you note each and everything, guys, so that you can be revising them in your free time, guys. You get my point, guys? So, guys, I won't be wasting a lot of your time. Let's proceed from where we stopped from the part one. Because I remember in part one we are talking about an uptrend, and our next topic was about the ranging market. So before we proceed, let me just remind you of the few steps that we started yesterday. Yesterday we started with the market structure. So after studying with the market structure, and I remember telling you that the market structure has different topics. It has three topics whereby I told you we have what we call, those that remember very well, we have what we call an uptrend, have what we call an uptrend. I will just use short forms, an uptrend, and beside an uptrend, we have what we call a ranging market, a ranging market, and besides a ranging market, we also have what we call an uptrend. You get my point, guys? An uptrend. So very recently, we are studying about an uptrend, and I told you an uptrend. This is the series whereby the asset will be forming higher highs, higher lows, higher highs, higher lows. But this time around, when it's moving up, you get my point, as you hear the word that it's an uptrend. And, guys, I gave a few topics about, I gave a few explanations about an uptrend. So, guys, don't hesitate to go back and at least watch the part two before you proceed. I mean, watching the part one before you proceed to part two. So, guys, we covered the an uptrend, and I hope, I'm pretty sure that each and everyone managed to understand what's an uptrend. So, guys, currently let's try at least learning about a ranging market. You get my point, guys? So, guys, I told you a ranging market. This is a series of market whereby the market, I haven't yet told you about that. So in a ranging market, this is where I will find that the asset is not breaking going down, is not breaking going up. In this what I'm trying to show you, let me show you from this live market. So let's say you find this price from here. Get my point? From here, you find this asset from this range here. This asset, it's not either breaking going up, it's not either breaking going down. You get my point? So as I told you that in an uptrend, you'll find that this asset will be creating higher highs, higher lows, higher highs, higher lows. You get my point? Higher highs, higher lows. But if you get into this asset right here, you can see that this asset, it's not creating what we call higher highs. Like, it's not breaking the previous swing highs. As you can see, it's stopping from here, and this time around it's not breaking the previous swing low. You can see it's not breaking going up, it's not breaking going down, it's not breaking going up, it's not breaking going down. So we usually don't recommend trading that asset. And usually, guys, that if you find this asset consolidating, just to know it's either going to form a continuation, or it's about to change structure, or it's trapping traders. You get my point? So at times the price will consolidate, then it will break out, giving a fake move, then the original move will be downside. You get my point? Why do they do such stuff? Reason here, we have seen, we have created a lot of liquidity here up, we have created a lot of liquidity here down. So if, and we all know what moves the market, it's what we call the liquidity. So after the market sweeping out all this liquidity that was formed here up, just to know, it will just come down to move to sweep another liquidity that was created here down. As we can see here on the live market, that liquidity was created right here. After they came in, they swept the liquidity. That is why I told you we shall be taking our entries from this liquidity right here, from this liquidity right here, those that have been listening to our videos. So we took the trade basing on this liquidity right here, because this liquidity, I'm pretty sure they had to leave it because to be used in the future move. So after sweeping this recent liquidity right here, we got a nearby order block. Those that listen to our video, and you can see this week's, I can see this week's managed to sweep this liquidity right here. You can see they removed all this liquidity right here, as you can see right here. So after them sweeping the liquidity, they had to come to sweep the what the downside liquidity, as you can see. So them, after them sweeping this what, this liquidity right here, and you can see this this asset has started with some imbalance, what the rest of the people call the Judas swing. You can see right here. So that they have to come and cover up something up, as you know, because we all know that wicks cause damage. You get my point? So that's why we need at least a body. As you can look and you see in the different asset, the asset sometime back, you can see that there is no wick that was left behind. At least they come in and they cover it. So here you could have taken another entry right here. Those that want to make massive flips here, you could have entered a new trade. You get my point, guys? So with time, guys, you shall be learning those stuff. So here it is. I'm still explaining more about the ranging market. So guys, with the ranging market, you find that the asset will either not be breaking up or it will not be breaking down. Okay, like it won't be breaking the previous swing highs, it will not be breaking the previous swing lows. You get my point? We only see the asset consolidating or ranging in a certain range. So with that, whenever you see that this asset will receive a momentum candle that breaks that range, just know that the original move will be the downside. You get my point? Or at times, some traders will always wait for a retest. Let's say if you pull this range right here, you will see that a lot of traders were trying to take some buys from here, but still they were liquidated. Why? Because we see we still had some liquidity here down that needed to be taken out. So here I couldn't recommend taking your buys. Those that trade a break and retest, as you can see, let's say you draw your trend line up. Let me first remove this. Let's say you do your trend line up right here, right here. Let me show you. Let me show you. After drawing your trend line up, we see that the asset was consolidating. Then you wait for this asset to break out. Then you take from a retest. Guys, I don't really recommend that. At least first look, is there some liquidity before you take the entry. If you notice that there is some liquidity, just know, guys, that liquidity has to be swept. So after being swept, it's okay, you can take your trade, but you can't take trades from here. Yet you see we still some liquid, we have some liquidity down here that needs to be swept. So guys, even if we proceed on the other time frames, let me first see where can I show you another example. But I usually recommend you use a line chart to see these types of what, to be able to see the clear view of the market. You get my point? So here we can see another ranging market right here. Let me show you another ranging market. As I've told you, this price will consolidate. Get my point? After consolidating, they always create a move. If they break going down, just know that the original move will be up. Why? Because we see here they have they have managed to create some liquidity up, they have managed to create some liquidity down. So if they start with sweeping the down liquidity, just know that original move will be up. Why? Because we see the downside liquidity has already been swept. So I have no reason why I should be continuing to sell. So why should I be looking for buying opportunities? Here, reason we shall be attacking this previous liquidity, targeting this previous swing high. You get my point? So if we go another way and we look for another consolidating market, let me see how I can find more liquidity. This what? These consolidating assets. You can see here we are not either breaking going up, we are not either breaking down. So we later on we saw a move that came in and swept this downside liquidity. So as I've told you, if they break going up, just know that the original move is going to be down. But if they break going down, just know that original move will be upside. You get my point, guys? So let's look for more liquidity as I show you how it works. Let me show you where it is. Okay, where is, let me see. Remember, this asset is not either breaking going up, it's either not breaking going down. That's what we call a ranging market. Okay, like the asset. Here it is, here it is, here it is. Another explanation right here. You can see right here, we are not breaking going either up. Let me first show you. Okay, let me at least try try to show you. At least you can see this, that is a bit clear, that you can see this asset is currently not breaking going up. You can see it's not breaking going up, it's not breaking going down, it's not breaking going up, it's not breaking going down. So we here received some, you can see here they came in and they hunted these stop losses that were right here a bit below, then we received a original move. You get my point? So guys, the consolidating market at times it's used in reversals, like the asset, to show that the asset is about to change, it's about to change structure. It can also be used in Utah swings, it can also be used in trapping traders. You get my point? So that's why we usually don't recommend trading a ranging market. If you see that the asset is ranging and you see it breaking going up or down, just know that the original move will be in the opposite direction. You get my point? So here we can see this asset ranging from this, sorry, you can see this asset is right, it's currently ranging. As you can see, it's ranging, not breaking going up, it's not going breaking down. So it later on received some momentum that came in and broke this, what this previous, this liquidity was dropped right here up, then we later on saw the original move. You get my points? So after seeing that the asset, after seeing the asset ranging, guys usually know they're about to create at least some massive moves in the market. You get my point? After you see them consolidating, just know anytime from now we are expecting some big moves in the market. You get my point? So as you can see, even here the asset was consolidating, was consolidating, was consolidating, was consolidating, later on received a move that came in to sweep all this liquidity, because you can see all the liquidity started from here. So they had to make a big move. So here I could be looking for for selling opportunities, but only taking the selling opportunities after getting my selling model. As you can see, those that trade the retest here, they could have taken some bid home, but later on received some SMT. You can see this SMT right here. I'll be teaching you about most stuff, the stuffs after receiving this confirmation. Then I could be taking my sales, targeting this previous low right here, because price always has to break these previous swing highs. You get my point? That's where I usually take my TP. You get my point, guys? So as you can see, if we continue to go back, we continue back testing, you can see, let me try looking for more consolidating markets. As you can see, even here, let's see right here, you can see this asset here was consolidating. You can see right here, you can see right here, we saw this price was breaking going, it wasn't breaking going down, it wasn't breaking going up. You can see how the way it was consolidating, indicating us that this asset, remember the consolidating market can either mean to be, can decide to be shifting market structure. Once they consolidate, just know they're about to change structure, or they can do continuation. So it bases on your analysis that you have. But we can see this price later on received, they came in, they broke they took out this upper liquidity, and I told you that any area that they break, if they break going up, just know that the original move will be down. You get my point? So after receiving some candles that came in and broke this previous, this liquidity that swept all this liquidity, later on we saw the original move coming in. So guys, I don't know if I've made some sense in this. What I mean, guys, watch this. If you find the asset consolidating, let me show you from this, let me give a clear image from here. If you find, let me, okay, let me just draw some boxes to explain more about this. Okay, okay, here it is, guys, here it is. So if you find this asset consolidating, you see, if you find this asset consolidating like this, remember it's creating liquidity up, creating liquidity down. So always first watch the asset. If it breaks going up like this, don't wait for a retest. This is a trap. Remember here we still have some liquidity that was created from here. If they break going up, just know always the original move will be down. You get my point, guys? The original move will be down, because remember we have created liquidity up, we have created liquidity down. So if they break going up, just know that the original move is going to be down. Same applies here. If you see this asset, if you find this asset moving like this, if you find this asset moving like this, you get my point? Moving like this, consolidating, and they sweep this downside liquidity, the downside liquidity, as you can see, just know, guys, the original move is going to be up. Get my point, guys? Let's not complicate these things, guys. I hope you're trying to pick something. If they consolidate like this and they break up, remember here we have some liquidity that we created, so we need this liquidity to be swept out. You get my point, guys? So if it's swept out, and remember to find your TP for this, at least target the origin of the move, where this move started, where the move started from. This move where it started from. Let's say these candles were right here. You could have targeted, this tip right here, but since this was not just the origin, because this was just a pullback, so you put something like here, here, you put your TP right here from the origin of the move. You get my point? So guys, whenever you see this asset consolidating, just to know they are about to give some real cash in the market. So same applies here, guys. If you see the break going down, just know that original move will be up. So it can be used in reversals. Let's say this asset was moving up, you get my point? Then it consolidates, trying to change structure. Even if they are to move down, guys, at least they have to give some wicks, like let's say bodies. They have at least to give some bodies that will come in and sweep this liquidity, because guys, they can't leave these traders right here, they can't leave them to be in the asset for with the act like to move is the big bank. So they have to come in and first break they first have to come in and sweep this liquidity. After sweeping this liquidity, then they will give the original move. As you can see, the example is right here. This asset was moving up, as you can see, but later on it started consolidating. But in this consolidating, we received some bodies that came in and swept this liquidity right here. These institutional moves right here. They came in and swept the liquidity. After receiving the liquidity, then the asset just moved down, as you can see. Because guys, these were at least good pips, as you can see. Again, we saw this asset was consolidating here. As I've told you, if you see this asset consolidating and they break either up or down, just know that the original move will always be up. So here we see they received this liquidity right here. After sweeping this liquidity right here, you can even wait for your order or bottom, then you take that trade. You get my point, guys? Same applies again here. You can see they consolidate, they break out, they create a down bottom, they move down. Get my point, guys? So as simple as that. You can see again here, we consolidated, we created a down bottom, then we pushed down, guys. Whenever you see a consolidating market, just know there are opportunities. You get my point? Here we consolidated, then we broke going down, then the original move came in up. So again, applies even here, guys. You can see, let me see. Yeah, let's see here, the asset here right here was consolidating, but this move was not there, the liquidity was not taken out. So what I expect at least an institutional move in the future to come in and break this liquidity. So if we try and see this liquidity wasn't taken out, so this liquidity keeps you to be curious. Anytime it will be swept out. You get my point, guys? Again, here you can see this liquidity was created, later on received the institutional move that came in and broke all this liquidity, that swept all this liquidity, then we received the original move up. So anywhere you see the liquidity and it has been, let's keep moving. You can see here you can see this is the ranging market, as I have told you guys. Those that remember our example, later on received their move that came in and swept all the liquidity, leaving none. Later on we received the original move. So guys, I don't know if you have tried to pick my point. So if you see a consolidating market, let me give more clear explanations. If you see the asset was moving like this, it starts consolidating, just wait for them to see where are they going to break. If they break down, some of the traders will think that, oh, that has been the change of structure. But remember, here we haven't yet swept all this liquidity. So I think this could be a trap. At least if you see that they have broken going down, just know this asset is still continuing, and they will just give a retest, then they will just continue. Get my point, guys? So just stay wise, guys. Don't be trapped by the market maker, that they will be giving you some hope that here you have been breaking going down, that you think that you are waiting for now order block right here to take more entries. Guys, your money will be just be chopped. So here it is, guys. Here you can see the asset consolidating again, then later on received a breakout. You can see a breakout. This is at times called, is it the Judas string? What is it called? No, this is not the Judas string, sorry. So here we can see the price consolidating, then they broke out, sweeping out all the liquidity that was accumulated from here. Here we got a new deals, taking the original move. So guys, just imagine you took your trade from just here, from the week, and you took all these pips right here. Guys, you get my point? Just imagine. So as we keep on moving, guys, as you can keep on moving, again, you see the same stuff here, the same stuff happening again. You can see that this asset has been consolidating from here. As you can see, this asset consolidating from here, As I've told you, always first wait and see where are they breaking. Are they breaking, going down, going up? So here we see they were consolidating. Later on, we received momentum here that came in and broke going down. Then here we took our entries. So even if this asset comes and give and keeps in some simple drawdowns, but just stay contented because guys, this was just a Dow bottom. Is it a Dow bottom, or what other traders call SMT? What other traders call divergence? You get my point? Because here we received the hidden divergence right here, but even right here we received again another divergence. You get my point, guys? So that's how you can make money out of the financial market, just considering the consolidating market. You get my point, guys? So here you go again, guys. Here you can see this asset was consolidating from this range, not breaking up, not breaking down, but later on received an impulsive move. As you can see, then the asset started dropping. You get my point, guys? So guys, that's how it works on a consolidating market. You get my point? So if you see that the asset is consolidating, just wait to see where they are going to break. If they break going down, just know the asset is going to go in an uptrend. If you see them breaking going up, just know the asset is going to drop. You get my point, guys? So even here you can see this asset has been consolidating. After consolidating, we received a breakout, so they had to come in and break this what and at least sweep this liquid. To get my point, guys? So I think, guys, we have learned something about the ranging market, and very recently we started about an uptrend. And guys, make sure that you listen to our part 3 where we are going to be teaching you about an uptrend. So guys, please note at least some rules that you should never trade against the trend, because guys, those stuffs are so useful, guys. So I think, guys, we have managed to master what's the ranging market, because this is the series whereby the asset will be either not breaking going up, or it won't be breaking going down. You get my point, guys? If you find that the asset is not breaking going down, it's not breaking going up, just know that's a ranging market. And guys, we don't trade ranging markets. We always wait to see, are they breaking going down? Yes, if they are breaking going down, we wait to receive at least a Dow bottom. After receiving a Dow bottom, then we take our buys. You get my point? So as you can see here, I'm pretty sure here this asset at least created some Dow bottoms inside the lower time frames, as you can see right here. After them consolidating, let me just show it here to you. Yeah, to you. Let me just show this right here to you. Let's do this. After doing this, I'll bring my label right here. So you see this asset was consolidating right here. You can see this asset consolidating, consolidating, consolidate. Then it breaks out. You get my point? They always wait for at least for a Dow bottom or a divergence, then take the original move. You get my point? So here I think we had some Dow bottom, but it was a bit hidden, because remember, guys, this is a higher time frame that I'm using. So guys, I think you have managed to master something. You have understood what's a raining market, and I think, guys, make sure that at least you practice these stuffs, not just watch them, but at least try practicing them, guys. You get my point? So remember, our mission here is to take you from scratch to advanced. You get my point, guys? So make sure, even guys, you hit that subscribe button, like, comment, share to friends, guys. Let's go together. Let's make money out of the financial market. As we promised you, our mission here is to make sure that each and everyone earns that financial market, that financial freedom in the financial markets. You get my point, guys? So, and I've told you, since we are providing the knowledge, those that are consistent, still don't hesitate to DM us. We see how we can help you. Those that can make money out of the financial markets, not only making money out of the financial markets, as long as you can make profits out of profits, don't hesitate to DM us, guys. I think, guys, that's for today, guys. Stay blessed. See what we